Good evening, everybody. Uneducated economist here. So I am doing this video from the wife's car. I just dropped Freddie off at not Jim Jam. Jeez, he does so many things. At basketball today. And thought before that got started, I'll come out here and do a quick video for you guys. I want to do a little bit more talking about the video I did yesterday because a lot of people, I got a lot of backlash from yesterday's video. Basically, I said that if you want to understand the economy, you got to forget about politics. And man, I mean, I mean, I got quite a bit of backlash from it. And again, a few emails even. So really, when I try to look at the economy, I try to look at it from anything but a particular point of view, not from like, hey, this is caused by this is caused by that, but maybe the cause and effects of the situation that is happening at the time. And by that, you can really see that things were already taking place before we got there. So it's not like, you're trying to figure out what happened. You already knew what was happening. You can kind of already see it. And so when all of a sudden things like all of a sudden explode, and everybody's just like, hey, what's going on here? And they want to point at, a particular area and blame it. And a lot of times that ends up being on politicians and they're easy to blame. So when I look at like the economy, again, I think about things that are a cause and effect, things that are happening now that may like be a reasonings for other things to occur into the future. And if you're looking at like straight through the eyes of politicians or the political environment of it, then you're going to find your answers. You're going to find everything that you need as far as what's going on in the economy by blaming a politician. You can blame, okay, let's do it like this. Let's think back a little bit to when the pandemic first kicked in. Everybody's paranoid, freaking out, right? A lot of us who were on YouTube and following the economy, we saw that there was a recession coming. We knew it. We had no idea what it was that the Federal Reserve was going to do to try and stimulate the economy, considering that the Fed funds rate was already like less than the 5% that they would normally want to drop it to try and stimulate the economy. It was like at 2%, right? 2.5%, I think, is really what it was. And so they knew that dropping from 2.5% down to zero was not going to stimulate the economy. And they said it. They said it back then that it was going to take fiscal stimulus. That means fiscal stimulus means that it's going to be government spending. And they knew that this was going to happen and that they were going to facilitate the trade. So that right there, by saying that before a political decision was made, the Federal Reserve already said, hey, when we come into the next recession, you all going to have to do some serious spending and we're going to facilitate that. Okay. So tell me, where is it that you were going to vote for them to not make that happen? I mean, what political, is it Republicans or Democrats that you would vote for to make that not happen? All right. We didn't know there was going to be a pandemic. The pandemic kicks in. All right. Once the pandemic kicks in, special purpose vehicles were established to backstop every corner of the financial market. Now, these special purpose vehicles, they're entities separated from the Federal Reserve. Were established by the Treasury and the Federal Reserve in conjunction. This is how they legally did it, right? Is because the Federal Reserve and the Treasury, neither one of those are allowed to do what they were about ready to do. They had to have a separate entity, a toolbox that could be used in unusual and exigent circumstances. So they already knew that it was going to take fiscal stimulus coming from the government spending, and that the Federal Reserve was going to facilitate that trade by going into quantitative easing, and that these special purpose vehicles, this toolbox that they had, was going to be used in unusual and exigent circumstances. And all this had to have been known prior to any politician or anybody else making any kind of decisions on stimulating the economy during the COVID pandemic and all that other stuff. Now, if you follow the Federal Reserve and you listen to those things being said, you don't know exactly what's going to happen. I didn't know it was going to be a pandemic. I didn't know that they were going to be stimulating the economy with checks and severing of the supply chain to try and get the inflation scenario. I didn't know any of that stuff was going to happen. I mean, none of that. But then again, none of the politicians were coming out saying, hey, these special purpose vehicles are going to be bailing out the nation. Did a single one of them say that? Can you find one that even talks about them today? Okay. Now, let's go and take a look at the lumber, right? Lumber prices were shooting up. They were going sky high, and everybody's flipping out. And a lot of people who were following my channel were not like misunderstanding it. They weren't confused. They weren't like saying, I can't get this around my head. How come the lumber prices are up so high? They completely understood. In fact, so much so that hedge funds were following my channel and making money off of it. I mean, this is something that George Gammon had told me, right? I didn't know. I mean, I did talk to a few traders who said that, hey, man, I really appreciate your information. It's doing quite well. I mean, I wish I knew how to make money like that. So when I'm watching these lumber prices moving up and all of a sudden they get up to 1,700 per thousand and everybody's flipping out about it. Everybody's like, man, what's going on with these lumber prices? How come they're so high? We need congressional testimony to figure out, do an investigation to figure out who's manipulating these prices, because 1,700 per thousand is far too high. But yet there was nobody confused about it on uneducated economists. I mean, they should have had me testify in front of them. I could have explained it clearly to them. Yeah. And so this is the reasons why I don't follow politicians. I mean, if you want me to follow a politician into understanding the economy, then I would be just as confused about lumber as everybody else was. Okay? So I don't do it. I just don't follow them. Now, yeah, there is a lot of stuff that you can follow that is going to happen. Okay, again, let's think about the trade wars, okay? So here it is. China's all pissed off. America's all pissed off. We got these trade wars happening, and China's inflicting these tariffs on the logs. After, basically giving the finger to our logs, saying we don't want your logs anymore. And now this is after the trade wars began. So that was certainly a political environment that created that little situation to happen. And you know what happened after you sever a relationship like that? Is that China went to Russia and says, hey, you guys got a bunch of logs, and Russia became the #1 exporter of forestry products. That definitely was a political thing that happened there. But did that really change the environment here in the United States? We were running out of logs anyway from the British Columbia area. And we were reestablishing new trades down, or new mills down in the southern part of the United States, which is still taking place today. I mean, none of this has anything to do with politicians. This was an environmental thing along with an economic impact that's going to, going to take generations to reestablish. I mean, it doesn't have anything to do with politicians. I'm looking at it, I'm like thinking, who are you going to vote for that's going to make any difference in any of this when it comes to what's going on with this lumber trade and mills and stuff like that? Yeah. I mean, you could have little manipulations inside of it or something like that, but the overall, the overall grand scheme, it's going to continue on the way it's going right now. You're going to find Canadian companies setting up shop down in the southern part of the United States, basically avoiding the tariffs and the taxes and everything else that's going on out there. So this was something that was going to happen anyway, because there's a glut of trees down in the southern part of the United States. I mean, whether it happened through the tax, the taxing of whatever the Canadian imported stuff, because there's a huge trade war that happens. I guess a lot of people don't realize that there's a lot of trade disputes that happen between the softwood imports that come into the United States from Canada. They get blamed for basically dumping the softwood into the United States and subsidizing their mills with it. Anyhow, it's a big trade thing that's been happening for I don't know. I mean, I'm thinking, I don't know how far back this goes, but I think the earliest articles I was reading about it was back in the 80s, and I think it even goes back into the 70s. So it's something that's been going on for a long time. And again, both Donald Trump and Biden hit them with these tariffs, on the softwood imports. So, I mean, I just don't see it as being a political environment when I see a lot of the stuff out there is easily explained outside of politicians. Even right down when it comes to the mortgage rates. A lot of people want to blame the whole mortgage thing on politicians. Again, it doesn't have anything to do with it. I mean, I did a video back in December of 2018 describing the scenario of what we're talking about right now. I cut it into a short, and I'll leave a link down in the description for it. But even that was like, you think about the issue with like mortgages. A lot of people want to tie it to the 10-year treasury, which is very reasonable. I mean, I have put the 10-year treasury as like, and I've said it on this video, on this channel a lot too, that the 10-year treasury is like the key indicator of where all interest rates are going to go. So if you follow the 10-year, you're going to see where like credit card loans are going to go, houses, cars, credit cards, whatever. All this stuff follows the 10-year treasury. Now, the main reason is like the 10-year treasury is by far the most safest liquid asset that you could possibly have in possession. And all banks know this, like everybody, investors know it. So whatever that interest rate goes, it's going to dictate where all the rest of the interest rates go. Now, mortgages are a little different. And although a lot of people want to look at the 10-year treasury and say, hey, this is the main indicator that you want to follow, the mortgage-backed security market is really where the mortgage interest rates find their level. And it doesn't really deal with the 10-year treasury. The 10-year treasury is just kind of like a benchmark. The mortgage-backed security market, it works independently of the 10-year treasury. And so when you hear about how the Federal Reserve is going to be dumping out a bunch of mortgage-backed securities into the market as they're unwinding their balance sheet, now a lot of people, and including myself, said, man, this is going to cause a flood of mortgage-backed securities into the market. If you have a flood of them, the price of the mortgage-backed security falls, right? Supply and demand issue. And like if you're selling mortgage-backed securities to investors, if you have a flood of them going into the market because the Federal Reserve is dumping out their treasury, or they're unwinding, so dumping out their treasuries and their mortgage-backed securities, then what you're going to find is that there's going to be more supply of these mortgage-backed securities for the investors to buy. What happens is the price falls and the yields rise, right? That is what causes the yields on the mortgages to go up. However, the Fed funds rate has continued to tick up, and what will we find? Well, the 10-year treasury, although it did spike in yield, back in November, it fell, spiked, and is falling again. And yes, the mortgage-backed security market is following something very similar to that. But does it follow the Fed funds rate? No. Does it work independently of the U.S. Treasuries? Yes. And so what's happening in the mortgage-backed security market is that there's not a flood of mortgage-backed securities out there, but because the interest rates had risen so much, there is a lack of refinancing of old mortgages into new ones. That does not bring in new mortgage-backed securities onto the market. So there has not been the steady flow of mortgage-backed securities coming in like the environment that the Federal Reserve had created during the quantitative easing programs. As they were buying up all these mortgage-backed securities, it gave people the ability to refinance their loans, creating more mortgage-backed securities to be flooded into the market. And when you flood them into the market, what do you get, right? You end up having a bunch of people who are now in there front running the Federal Reserve doing the exact same thing as the Federal Reserve as far as buying these mortgage-backed securities up. When you have the exact opposite happen and they say, okay, I'm going to dump these mortgage-backed securities into the market, and all of a sudden nobody's buying houses because the interest rates have gone up, or less people are buying houses, and those people who were refinancing are no longer refinancing, where does the pool of mortgage-backed securities go? It diminishes. And so when the yields begin to rise, as the prices on these mortgage-backed securities fall, as there's supposed to be like a flood of them, and there isn't, because all of a sudden here comes the investors. And now they're looking at those mortgage-backed securities and the yields have risen on them. And they're saying, wow, that's actually a level that I might buy into it. And now we're finding that the investors are buying into those mortgage-backed securities at that particular level, even though we don't really have a housing market that's really exciting. So what's going to happen is you're going to find that those mortgage-backed securities are not going to be built and put into that pool of buyers. And you're going to find that the pool of buyers are going to find a demand, or you're going to find a demand from them buyers going into that supply or the lack of supply of mortgage-backed securities. Interest rates can't go any further. So now I think, does this have anything to do with the politician? any of that. I mean, I can't find a single spot where you can inject the politician and say that's their fault right there. So you can go ahead and blame everybody you want. It doesn't, like, you can, it isn't even a matter of blame. It's a matter of the current economic environment, understanding it and knowing how it is that people are going to react to that. And this is really where I think, like, the low interest rate world has really screwed everybody up. They just don't understand that once you get into a low neutral interest rate world, or even worse, you get to negative interest rates, stimulating the economy is no longer an effective tool. Like, it'll stimulate and you will see a jolt. Like, you will see things happen for just a little bit. But because the return on capital investment diminishes as much as it does, eventually it turns into a deflationary scenario. And now if you think about it, when you have like a return on your capital investment is exciting at like 2 or 3 or 4%, when you have inflation running at 7, then there's no way that you're going to have a return on capital investment that can stimulate the economy. You would have to get a return on your investment so far above inflation that it would have to be like a 13, 14, 15%. Anything else is going to continue to drag on the economy unless you inject more stimulus into it. So now, when it comes time to deal with the economy again, because the politicians are going to have to react to it, it's not the politicians that are creating that situation, right? They did all this stuff. They severed the supply chain. They injected the economy with a bunch of money, and they did a bunch of hoopla bullshit, right? I should stop cussing. I'm sorry. If you're listening and I cuss, I'm sorry. But they did all this stuff, right? And then it's going to wear out. And then the economy is going to go back to what it was doing. And that's then that slow grind of deterioration as the people dive into luxuries, the separation between the rich and the poor, the ever-increasing, diminishing amounts of manufacturing within the United States, the ever-increasing amounts of foreign imports. This is something that you can't stop. I mean, they try. Look how much effort they went into to try and create something that would stop it from happening, but it doesn't stop it, right? Eventually, it's going to go back to the way it was, and the real true powers of economic forces are going to take over, and then we're going to find ourselves, right back in another situation that is very similar to this, only looking different. And again, what are you going to find? Politicians reacting to it, So, I don't know. This is the way I see things, and I mean, it gives me a much clearer sight. Like, I mean, I don't think I would have been able to understand what happened inside of the lumber industry if I was trying to look at it through a political view. Like, this was the politician's fault. And I heard it a lot. And nobody could explain. I said, how is it? And they said, that's because it's their fault. And then they would kind of babble on about money printing or something. And I'm like, that's the Fed. And then they didn't have any clue what to say after that. So thanks for hanging out with me, guys. Uneducated economist. I'm going to go watch my boy play basketball. You guys let me know.